My name is Scott Macmillan. I'm the Managing Director of Invictus Energy. We are listed on the ASX. The ticker is IVZ. We're an oil and gas exploration company focused on Zimbabwe. Our primary asset is the Kabora project, which is located in the north of Zimbabwe. We've just completed an infill 2D seismic campaign and acquired 840 kilometers of data and preparing for a high-impact basin opening drilling campaign in the first half of 2022. The Mzarabani prospect is an elephant-sized prospect, 8.2 TCF and 247 million barrels of condensate, which is one of the largest conventional targets going around globally. So a very exciting period ahead for the company.
Scott, lovely to meet you. Thanks for coming on the show. We're going to talk oil and gas today. We better kind of break a few things down because there's a lot of moving parts. As you say, it's potentially a very big project. Big asset for sure. Give us a bit on your background.
Sure. I've got a technical background. I'm a reservoir engineer. I worked for a long time in Australia, over here where we're based, for Woodside, who's Australia's largest oil and gas producer, and then also for Armour Energy, who we helped navigate into Uganda, and then most recently before Invictus at AWE, and I was involved in the Waitsia gas discovery, which is the largest onshore gas discovery in Australia for the last 40 years. And that was fantastic to be a part of and great to develop, and ended up ultimately being bought out by Mitsui and now being developed.
Okay, so you're Zimbabwean. You worked in Africa and in the industry, reservoir engineer. Have you run a public company before?
No, so this is my first time public company seat, but obviously worked for publicly listed companies before.
Right. Okay. How are you finding it?
Look, it's been an interesting mix. I think when you're running a public company, you've got a few different hats that you have to wear. Not only do you have to look after the project, which you're used to doing as a technical person or in a managerial role, but you've got the capital market side is equally important. And so the measurement tends to be the share price, but that's not always the be all and end all. It doesn't matter how well or how poorly things are going. That's how you're judged. So that's sometimes can be frustrating, but also sometimes very rewarding when things are going well.
Okay, well, good luck with this one. Let's talk about a few things that people might be disconcerted about. So we've got lots of natural resource investors on this channel and viewers elsewhere, subscribers elsewhere. Oil and gas has not had an easy time over the past few years. Things are looking up again as the price of oil recovers. But Zimbabwe, that's a tough place to do business, isn't it?
Yes, it has been. Historically, it has been a very, very tough place to do business. I guess the differentiator for Invictus, though, is we've got a very, very strong local management team. As you mentioned previously, I'm Zimbabwean. My family has been there for 5 generations. We know the jurisdiction very, very well. Our country manager, Brent Barber, actually ran Mobil's exploration campaign, the last oil company that explored in Zimbabwe in 1990. And then on our board that we appointed earlier this year, as part of a strategic investor that we brought in, a Zimbabwean strategic investor, is Joe Matizwa, who's absolutely fantastic. He, a heavyweight in business there, ran Delta Corporation, which is Zimbabwe's largest listed company. He sits on the Presidential Advisory Council, was a former member of the Reserve Bank Board, and so he's very, very well-averse at doing business in Zimbabwe as well. So we've got a good mix of corporate and technical expertise involved with the project.
Right, so lots of experienced people on the board, on your operational team, but the question remains, is it easy to do business in Zimbabwe? Is it slower? Should we expect longer lead times, or have things changed with the new government?
Things have changed considerably with the new government. I've been involved with this project now for nearly 10 years, and up until the change of government, we struggled to get it off the ground, to be perfectly honest. We couldn't get the approvals for the permits made, and because of the investment laws and environment there, it was impossible to do business there. And even if we had the permit, we wouldn't have been able to progress the project because it was inhospitable for investment. With the new government coming in, they've changed. They have brought in some great reforms that have now opened the country up to do business again. So they've rescinded the Indigenization and Empowerment Act, which mandated majority government ownership of businesses. They brought in other attractive measures such as special economic zones, which treat you basically as an independent state within the country and provide a range of fiscal and non-fiscal incentives. And most recently, we signed a petroleum exploration, development and production agreement with government, which lays out a clear framework and pathway for us to develop the asset on success. So they have opened the country for business, they're putting in the right reforms and allowing us to get on with the project. So it certainly has changed.
Right. So you're after gas and condensate, is that right?
Look, we believe that it's most likely to be gas and condensate from all the geotechnical work that we've done, from the geochemical sampling we've done. The source rock, and there's two main source intervals. There's the Permian interval and Triassic interval, are capable of generating both oil and gas. We believe from the modeling that we've done that the source rock is likely passed through the oil window and into the gas condensate window in the main fairway, but there's likely to be oil and gas generated in the basin. And in fact, we've recovered live oil at the surface from some of the Permian samples that we took in July 2019 in our field sampling program. So it can generate both, but we believe it's probably more likely a big gas condensate play.
Okay, so there's a lot of operators in country, actually, which is, I guess, a testament to how things have changed, the fact that they're still there. Does that suggest that there's an infrastructure as well? Because once you've found it, you've got to move it somewhere. So can you tell us a little bit about, because you're down there in southern Africa, inland. So it's on land, but it's also inland. Where does it go?
Yeah, and you touched on a very good point here. Often, particularly with gas developments, you need a couple of things, and that's infrastructure and also the market, more importantly. Zimbabwe, fortunately, has both. Now, we've already signed a gas sale MOU with two customers, one of them, Sable Chemicals, who manufacture fertilizer, and they import ammonia gas from South Africa by rail. And the second one is Tatanga Energy, who are a gas-to-power developer in West Africa and looking to enter into the Zimbabwe market. So the market side of things is buoyant. That's 1.2 trillion cubic feet over 20 years for those agreements. So that is substantial, will underpin the project from a domestic point of view. On the infrastructure side, again, very, very well developed in Zimbabwe and still good infrastructure by regional standards. So what we've managed to build into our agreements with government is, with the PEDBA agreement I mentioned earlier, is the easement and access rights for pipelines that come along with it, and to get it from where we are in Zimbabwe into our market with Sable and Tatanga, not very far. So Sable are circa 350 k's from where we are, and you've got where Tatanga will place their facility, and again, we're talking in a success case here. We're 100 kilometers away from the major interconnectors for the Southern Africa power pool. So
right.
That enables the export of electricity anywhere from Cape Town all the way through to the Congo. So we see that as the first two building blocks of any development, because if we discover 8 TCF or 4 TCF of gas, it's an awful lot, which will require more than those projects.
Absolutely. But if I might, because I don't want to get lost in too much data initially. So with those two MOUs, are they binding? Have they given you money? Who pays for the connection? Who's paying? Because 350 kilometers, I don't know what it costs per kilometer, but that sounds like an awful lot of money.
So look, firstly on the MOUs, so they do have a couple of CPs, obviously the major one being making a commercial discovery and proceeding with the development. So that'll be the first step. But because they're sophisticated gas buyers, they understand the risk. Sable were producing ammonia by electrolysis, and they were the original green hydrogen company in the world, and the only ones to really have done it at scale with 100 megawatts of electrolysis that they use from hydroelectric power. That became too expensive in 2014, and they've been importing ammonia gas since then. And they came to us, they've been searching for a source of gas for a long time, and they came to us and they said, look, we understand it's exploration phase, but we want to be at the front of the queue if you make a discovery. So putting the gas sale MOUs together has been actually a very, very simple and easy process because they are sophisticated gas buyers and they know what they're getting themselves into. So we're not too concerned in that phase because there are frankly no other suppliers. So they've also got the backing of Africa Finance Corporation, Africa Development Bank, because they are the only manufacturers of fertilizer in the country. So that, the pricing is works well on both ends, and so this is something that'll get off the ground. Going to the pipeline question.
Well, actually, just on the stick with the kind of conditional component, which was the assumption there is that they have not paid you money up front because there are conditions attached to the MOU.
Yes.
Is that right? Okay, just want to be clear.
That's right. Yeah.
Okay, so on the pipeline front, who would it be incumbent on? You getting contracts and raising money from, whether African Development Bank, etc.?
Yeah, so Zimbabwe has already a number of pipelines, and they've got competing pipeline proposals for developing infrastructure around the region because it's such a crucial piece of infrastructure. Zimbabwe serves as the gateway for a lot of the interior where you've got fuel imported from Beira into Harare and then distributed by road. And so the initial pipeline is too small, but you've got other competing pipelines to bring product to market. You've got some developers looking at gas from the Rovuma Basin in northern Mozambique, trying to bring it down to South Africa, which is 2,600 kilometers distance. So, 350 is shorter than most pipe runs in the rest of the region, and not a huge undertaking.
Yeah, but you're an $80 million company. So in that context, it is expensive. So I'm just going to work out how. Well, I know. I would like you to explain to people how it works, that you fund those things, and what sorts of quantum are we talking about? Because people would be nervous saying, "Wow, if it's $1 million per kilometer, whoa, that's expensive." So give some sense of the numbers and how it works.
Yeah. So firstly, that's really a midstream business, and that's not our focus. So this would be a third-party developed pipeline, and probably the best example that I can give you would be how the domestic gas industry is developed in Tanzania. So you've got two pretty marginal or the smaller fields, Songo Songo and Mnazi Bay. Those are sort of 300 to 500 BCF fields. Those pipelines were funded by a consortium of the IFC, International Finance Corporation, Africa Finance Corporation, and a Chinese group who built 450 kilometers of pipeline to take it up to Dar es Salaam. And those started off at relatively modest volumes of 20 million cubic feet a day. That market has now developed to 200 million cubic feet a day because the industrial demand, one for power and two for gas for industrial processes, has grown. And institutions like the Africa Finance Corporation are happy to fund those, and they become almost annuity type assets for governments and those midstream players, because they're backed by blue chip customers, and Sable Chemicals is one of those because they've got a long track record. And so that, again, that's not something that we have a huge amount of concern.
Right. So tell me how it works, because I did some work in South Sudan, and where all the oil was, but the pipeline was through Sudan. They controlled the pipeline to the port, right? So in this sense, tell me more about these, whether it's whoever it's funded by, IFC, African Bank, etc. Who controls that, and does that affect your ability to make margin going down the line? How do the contracts work?
So the contracts will be take or pay, and the customers will pay the tariff.
And how's that set? How do you make sure that you're not seeing sort of increasing costs coming down the line, as it were? So,
look, you've got relatively standard tariff rates in the region, and some good examples are the pipeline between Mozambique and South Africa that's set by that's the Romco pipeline. That's 860 kilometers. That is South Africa's sole, and we haven't really got into now the sort of where we ultimately see this project going, which is into South Africa, which is a major gas demand center, and that Romco pipeline, well established transit fees through there, and that's benchmarked and fairly typical all around the region.
Okay, good example. Better talk about the asset. I haven't even talked about the asset yet.
Yeah.
Okay, so I've saw some press releases. You've been doing a lot of 2D seismic. I guess that's cheaper than 3D, and you can cover a lot more ground. But tell people why 2D is good enough to find what it is that you think you're after.
Sure. So 2D onshore for the types of targets, we're targeting massive structural targets. So we're not trying to find a subtle stratigraphic trap. These are big, and if you have a look at some of the seismic images, that Mzarabani anticline is an absolutely enormous feature. It's 200 square kilometers under closure, and that's why the numbers are so big, because it's this big feature. So you don't need 3D to identify a structure like that. And 2D onshore in the exploration phase really is good enough, because you shouldn't be trying to find something that you need 3D to define at this early stage. So we're focused on the structural traps, and we see a number of different types of these structural traps around. So we've refined the previous mobile grid, which was around about 15 kilometer spacing, down to about 1.7 kilometer spacing. So that's more than sufficient to define the types of targets, and they need to be commercial sized targets as well for us to chase.
Well, the numbers you've been throwing at me, it's more than commercial. You've gone way past that mark. So just wonder, and again, for a small company, how you go about doing it, because you can, and quite frankly, typically when we've been looking at this, anything over 1 TCF, I'm like, okay, that's a starter for me. You're way past that. So how do you get the balance between trying to prove out, this thing is one of the world's largest basins and it's all under our control, and look what we can recover, and getting cheap finance to get the thing started to prove what you want to do? So I guess that's a factor of what your business model is here. So maybe you want to describe that for us. What is the model?
So the model for us is to go out and we'll be drilling the first wells in the basin. This is complete wildcat territory. So we need to go out, firstly, make a valid test of the petroleum system to make sure that we've tested all the elements, but also with the size of the structures we're testing, we need to get above that sort of minimum economic field size from the first 1 or 2 wells to then carry on in that basin. So if you're not, if that doesn't turn out, then we've got to go look somewhere else, to be honest. But we're confident in the size of the targets that we've got, that if we are successful, then they will be commercial and it'll get developed.
Right. So maybe explain. I do want to explore that further, if I may. But first, maybe just explain to people how it moves from all of this 2D work that you're doing, interpreting it, and being able to put a number on it, just for the uninitiated.
Sure. So with 2D seismic, we've acquired this infill grid, so that will map the subsurface, and we have got about 5 prospective horizons within the basin. So five separate stratigraphic geological sections that we're targeting. The main one that we're looking at is the Upper Angwa, and we think that is the key, and this is a lower Triassic unit. It's the key, and the key differentiator in the successful basins in this part of the world is presence of source rock in the lower Triassic, and that's where the big discoveries in Madagascar have come from, the Belamaloga and tar sands and Samira heavy oil, as well as Caleb and Halala in Ethiopia. Most have chased the Permian. We're interested in the Triassic. And the way we progress that now, we've got the previous mobile data, which continues a little bit further to the west of our license area, but outcrops, but ties into the outcrop of where the stratigraphy comes to surface. So we can track those geological horizons all the way through into the subsurface with the seismic. We then map the traps or the potential traps, and from the area of it, the estimated thickness of the formations that we're targeting, we can estimate then what the potential sizes of those prospects are. So we're going through the process now of having that seismic data processed by Earth Signal in Canada. The early signs are very, very good. We're seeing some very, very interesting amplitude anomalies that conform to structure, what you want to see from your seismic data. And once that is fully processed, we'll we'll interpret the whole data set and then come out with an updated prospect and lead portfolio. So we've identified this big Mzarabani structure. We're expecting to see a lot more though with that infill seismic grid.
Great. And so again, slightly for the uninitiated here, I said we were going to maybe do this, which is where's you produced some numbers, you've outsourced some of it. Where's the kind of regulated reporting on that data and interpretation so the market can go, do you know what, this has been validated?
Yeah. And yeah, so and that's a very important point. So because we are a small junior company, we're not just going to publish internal numbers. Some do. When we first started with this project and we put out our first prospective resource estimate, we knew it was big, and it's so big that we thought it was very important to get an independent assessment of it done. So we had two done. So we had one done by Netherlands Sewell & Associates, leading US petroleum estimator, and then also GTEC Group out of the UK, who are listed over there on the AIM, and they helped us also with the reprocessing of the gravity and the aeromagnetic data that we integrated into the seismic interpretation. So they provided a second independent estimate as well, and with our internal estimates, NSAI and GTEC's, they're all there and thereabouts. So our numbers are independent and audited and done according to what's known as the SPE, Society of Petroleum Engineers, PRMS, the Petroleum Resource Management System. So like the JORC code in minerals.
Right. Okay. So that's good for people to understand that. Okay. So you've been doing that work. You've got some historic data which you've incorporated into your numbers. You talked about in first half next year starting to drill on targets. So what again have you targeted? What are you expecting to find? What are you looking for?
Yeah. So part of the seismic processing work and interpretation will be to mature the location of the Mzarabani 1 well, so identify the exact drilling location and do the detailed drilling planning. So what we're trying to do, because we've got 5 stacked targets, we want to make sure that we hit all of those in the right spot to maximize our chances of making a discovery. So that's the first point. The second one is we're also trying to identify additional prospectivity within the acreage and from the seismic data that we've acquired, and the early signs look encouraging. So we're aiming for a 2-well program next year. So drill the very, very big Mzarabani prospect, which, if that comes in, it'll be one of the largest conventional discoveries in any year that it's drilled. But then also maturing some of these other still commercial, but potentially smaller, that will create some nice running room for us on success as well.
As a public company, you can't afford to get it wrong. You don't need a duster on the first hole or the second hole. You've got to go for the most likelihood of success, because it sets the tone for the narrative and the communication to the market. It says we know what we're doing. So again, does that affect the way that you go about doing this? Because when I when I speak to engineers and geologists, they say, well, the most sensible way, systematic way, is to kind of, this is the order, but it'll feed information into future drilling, because you got to manage oil and gas fields, right? It's not like mining. You got to manage these things. You can get it horribly wrong. So are you conscious of the market component versus how you would do it technically, or is it?
Well, absolutely. If you don't get it right technically, then there's no point. So getting back to what I said earlier, we want to make a valid test of the petroleum system with the well that we drill. So that means making sure that we are providing a valid test of the ingredients that you need for a working petroleum system, and putting a well in a location where we test the trap, reservoir, source, and seal all together. So that seismic infill campaign has been important for us to refine that location to make sure that we get it in the right spot. So there is always the market, pressure to go and drill the biggest thing around, but that is not necessarily the right target to drill first up. Mzarabani, though, has all those ingredients, and the seismic data that we're seeing, does make it the obvious candidate to drill. And luckily, it's pretty big and substantial too. Tullow, in their exploration heydays, used to take this approach where they made sure that they made a valid test of the petroleum system, because you don't want to walk away with any regrets and someone comes in after you and and uses that data and says, well, you didn't quite drill the right prospect, or this is what the interpretation missed. So we're making sure that we do that thoroughly and drill the right location.
Okay, you're onshore. That's good news for costs.
Yep.
Talk to me about the depths that you're going to be drilling, the cost of that, more importantly, and are you funded?
Yeah. So the being onshore, very, very cost effective compared to offshore. And just to give you an example, so Total, who have been exploring offshore South Africa, they've made a couple of discoveries there off the south coast, Brulpada and Leopard. Those are, comparable in terms of the volumes, so around about 5 to 6 TCF. Very, very hostile met-ocean conditions in that part of the world. The first attempt that they had to abandon because of the rig couldn't handle it in 2014 was $200 million. And then they came back in 2018 and re-drilled it for $150 million. We are going to be drilling onshore, similar size target, slightly bigger, 8.2 TCF and 250 million barrels of condensate. And that cost estimate is around about 12 million US, plus the MOB and DMOB, which let's call it 2 million each way. So the risk versus reward and the size of the prize for our outlay is fantastic. And that's why it's such an attractive opportunity, and why I liked it from a technical perspective, because it had been de-risked by Mobil, but also the sheer size of it and ability to chase something material for a very small amount of money, relatively speaking, in oil and gas terms. So, and again, we're focused on conventional resources. So the properties that we're chasing, conventional reservoir properties, we've measured the reservoir up the surface through the outcrop, fantastic porosity and permeability. And the depths of the primary target. So we've got, as I said, we've got 5 stack targets. The shallowest is around about 800 to 1,000 meters beneath the surface. And then the primary target, which is the upper Angua alternations member, this lower Triassic unit that I spoke of earlier, that top structure is around about 2,700 meters. And we'll test. The planned TDs are around about 3,500, 4,000 meters. So we're not chasing anything outrageous.
No. Okay. No, that's fine. And the answer of, are you funded for that? So
we're funded for the long leads, and now we're going into the drilling phase. So we're at the moment we are securing the rig, and that'll be done fairly shortly, and ordering the long leads and getting ready for the campaign in the first half of next year. On the funding side of things, we've got a 2-track approach. Initially, when we started this project, and we were a much smaller company, sort of $15, $20 million market cap company, trying to fund a drilling cost like that, the farm out route was the obvious way to go, because of the look-through dilution at the asset level, and just the sheer ability to fund it. To be perfectly honest, trying to raise that sort of money as a company that size was virtually impossible. As we've gotten bigger, and the equity markets have been far more receptive to oil and gas, particularly this year. When we went to fund the seismic, we went out for $6 to $8 million, and we got bids for $33 million in 3 hours, and shut the books. And typically that's the hardest activity to raise money for, because it's not particularly sexy in the market size. But I think with this project, because it's so material and so rare to have something this size in a junior's hands, and have our equity position at 80%, it's a very attractive proposition. And now I think people can see that we're progressing and going through the drilling. So the farm out process is still running to bring partners in, and obviously I can't disclose anything because nothing's final, but that is still ongoing. And then we're confident of either funding it entirely ourselves or a combination of partnering and a little bit of the balance of the funding.
Okay. So did you say you already have that 80%?
Yes. So we've got 80%
right.
of the project, and we're the operator.
No, I just want to make sure that all the conditions associated had been met, and that you are today. Yeah. And are you looking to get more? What do you think? that's not likely?
No, so the remaining 20% is held by a local partner there.
Okay. Black and Paramount.
Who was the original license owner, and we acquired an 80% stake in it.
Okay, got it. And that's I know a little bit about what South Africa was. What was the case in Zimbabwe? That is 20% is normal number, is it?
No. So again, that's one of the reforms that's been brought in by government. So there used to be a 51% mandated either government partner or local partner, but that was rescinded in early 2018 as one of the first acts of reform that the new government brought in, because they realized that it was stifling investment. So that 20%, our local partner was the original license holder, an applicant, and so we acquired that 80%.
Right. Okay. So but you could maybe buy some more from them if you wanted to. Right. Okay. So I just want to make sure what's possible, what's not. Yeah. Okay. Understood. And are they fully carried?
So they carried through the exploration phase.
Right. Till when?
Till final investment decision.
Okay. Fine. Understood. Now we've listened to the story. I appreciate it. It's a nice sort of helicopter view of the story. But you want to start telling this to new audiences. I notice OTC listing. Africa is typically, it's typically better understood in London than perhaps North America. I mean, what are you doing in terms of listings? Yeah,
so we're listed here on the ASX, and that's our primary listing. Mm-hmm. We're just completing our listing on the OTC, and that has been a very interesting market recently. I think for the Canadian viewers, they'll be familiar with a company called Recon Africa, who are listed there, and have done spectacularly well and at a similar stage of maturity as we are in the program, but they're capped at over $1 billion, and we're capped at 80 million. And they're exploring just down the Rift Basin from us in Namibia. So the OTC, I think, has been a natural progression. It's a fairly straightforward listing process, and not too much of a burden from a compliance. Additional burden from compliance. A number of other ASX companies have gone that route. 88 Energy, and they, again, huge volumes in their stock in that during that drilling period when they, were turning over hundreds of millions of dollars a day. And so it is a market that is receptive to oil and gas stocks. I think no matter where they're located, whether it's Africa or the North Slope or anywhere else. London we have looked at before, but it is look at it as a more difficult process, and you've got to come to London for the right reasons, I think. And if we're not going to be raising money there, then there's really very little point, I think, in listing in London for us at the moment. That may come later on, post drilling when we need potentially bigger licks of capital, because we don't need a huge amount for the drilling program. So it's we haven't seen London as a must-do for us. Previously, we thought that it was a more natural home.
Okay, no, that's interesting. I think with the US, you're right. They invest in what oil and gas they know, and it's good for liquidity, possibly even in on the ASX as well. London's getting back there, but I don't think it's quite there on the oil and gas front. But some good noises coming out of it. Brilliant, Scott. I enjoyed that. Learned a lot about what you're trying to achieve and the way that you're going about it. Appreciate you coming on. Stay in touch. Let us know perhaps when you start drilling. That'll be exciting.
Yeah, and I think we've got a couple of things coming up, which would be sort of pre-drill, which would, and maybe once the seismic interpretation is finished, and we can kind of run through.
Love to
run through where that sits and what the portfolio looks like ultimately, and what we're going to be drilling.
Yeah, no, appreciate that. Look, thanks for your time today. Have a good rest of the week. We'll speak soon.
Matt, thanks for having me. It's been a pleasure to be on the show. And just want to leave you with a few thoughts going in. We're leading into a high impact drilling campaign, and one that's going to be very closely watched. We're drilling one of the biggest conventional global targets globally, and that will be in the first half of 2022. Very, very cheap onshore drill, only 12 million for an absolutely enormous prize, which is 8.2 trillion cubic feet and 247 million barrels of condensate. So enormous scale and something that's going to be very closely watched.